Everybody knows that the days are low. The bad are lose, the good guys lost. Everybody knows that's how.
Here we go, right? What up, all? What up, all? We've got something happening. We've got something happening going on here in the world of crypto. The technology is somehow working. We have no listeners. Isn't that interesting? But we'll get some more here going. All right, what's going on here? What is absolutely going on here? What the actual F is going on here? We've got a bunch of BS in the crypto news. What is this? Binance proof of work auditor Mazars pauses all work. This is, it's goes back to the primary issue that exists in the blockchain space. You have Mazars said it had concerns about how the reports are being interpreted by the public. That is complete insanity. It's not your responsibility to figure out how the reports are perceived or interpreted. You provide the results. So why are they hiding the results? They will temporarily pause and work with all their crypto clients globally. Why? Everybody? Okay. Bazaar said in a statement that it paused work due to concerns regarding the way these reports are understood by the public. That's ridiculous. Do not constitute either an assurance or an audit opinion on subject matter. Instead, they report limited findings based on agreed procedures performed on the subject matter at a historical point in time. That's what auditing is. They did proof of reserve assessment, finding its reserves are over collateralized. The link is gone. They found that these other reserves are over collateralized, and they thought that Crypto.com fully backed 1-to-1. They were not immediately available to respond. And this is pretty pathetic. This is pretty pathetic. You have somebody who's auditing. Everybody's talking about, oh my goodness, that they were asking for audits and they were getting audits, and now they're saying they don't want publicly audits because the audits might be good news. The audits might be good news, and they might show that the exchanges are liquid. And so, what happens when they show the exchanges are liquid? Then it's bad. It's bad for them and good for crypto. And the people in traditional finance do not like blockchain. They do not like the fact that they cannot control access. They do not like the fact that they can be the borrowers and lenders of last resort. They've got Cardano price forecasts, new superior trading platforms. Dash to trade. Here's something that might be interesting. What is this? Fears over Binance. Binance are not satisfied. The exchange also temporarily halted withdrawals. They're going to try and charge them with money laundering, which is, I don't know how you're going to charge them with money laundering. They removed the audits. According to them, are now halted all work for CryptoKinds. Why? Early this month, they kind of. So they got new crypto intelligence and analytics platform. I'm learning this at the moment here. Dash 2 Trade is currently final stage of pre-sale. Yeah, this is kind of trading signals, alerts, professional grade trading indicators, strategy building tools, on-chain analysis, copy trading, learn to earn. This is um, learn to trade. Okay, so they built some stuff. Um, they are having tokens. See, they're attaching a token sale to like this. This is not that impressive, to be honest. Attaching a token sale to this is not the best. We'll see what they say. Dash to trade the next 10x. We'll see. See who this guy is. What do you got? Like, let's go skip through. They have a roadmap. So they've got their token on a centralized exchange. Price predictions. You notice there's nothing being talked about at all about the tech. You'll notice there's not really being anything talked about the tech. So what we can do is we can go here and we'll see. Let's see. Dash2trade.com. This is an example of what some kind of trading platform that's trying to fill the vacuum of FTX. This is not. So they've got Connect Wallet. I don't have a wallet in this browser. They use MetaMask or Wallet Connect. And what we want to do is we're looking for, yeah, all this BS. Who's their team? Anybody I recognize? No. Contract, that's their token contract. Okay, they've got their ICO selling, and they've got a Telegram, they've got an Instagram, a Discord, a Twitter, a LinkedIn, and a YouTube. So they're in Marshall Islands, offshore. It's hard to see. What I'm looking for is I'm looking for what, are they building anything that is other than, oh, here they have a white paper. There we go. They put the white paper at the top. Got to give them respect for that, but where is it? Is this, wait, where's the white paper? Download the white paper. There we go. Dash to trade white paper. Here we go. What is Dash to trade? Crypto analysis and social trading designed for traders. So it's an interface for trace all levels of traders to access signals of crypto space, thousands of tokens, quality and asset, and the speed of Means it's challenging for, add the volatility of price movements, crypto verification site, Coin Sniper estimates 20 every week. That's fine. On-chain analytics, okay, you get some nice charts, and you get some nice metrics and the social metrics like how many mentions this week, etc. Social and on-chain, it would be nice to have it actually all in one place. To be honest, I don't see. So they're going to provide AI, for example. Okay, so they got Twitter and Reddit. They put that through AI, natural language processing, determine what is actionable for market intelligence asset pricing. So token project activity, sentiment analysis, product developer activity. So they're putting like they take you to GitHub, and hopefully they understand GitLab, but they don't, and they're missing or other Git repositories. Sentiment analysis. So they got social media, they've got developer activity, and some sentiment analysis by their AI, and that's cool. And you're going to, what are you going to do? Scoring system for pre-sales and ICOs. It's pretty impossible to do this. Pre-sales and ICOs are pretty impossible. Dash to Trade is the first of its kind. They're going to provide good information for trading. The Dash scoring system, key features. Dash score assesses the general quality and fundamental metrics. They have a strategy builder, so you can do some auto trading. You can do a risk profiler. It's a trading platform, and on-chain analytics is nice too. And some alerts, social trading. Um, Token ecosystem operates on top of the Ethereum. Okay, so this is important. So it's mostly for ERC20, right? The native digital asset of the project is D2, which complies to ERC20. That's like, it should be better than ER. They should be saying ER775, or I forget what it is, but they should be referencing the newer version of ERC20. If they're just using ERC20, that's not very good. So it's a utility token. Access to the dashboard. They created 1 billion tokens, whatever, times 100 million probably, because they're using the 100 mil denomination to say that they can quote unquote divide them up, which is just a false client side abstraction. The D2 can use to pay subscriptions and to access the dashboards and all of its features. So they've created a token. You need to pay the subscription for their service and their token, which is a centralized service, by the way. So they've created an ERC20. They've created an app that allows you to trade on Ethereum. There's no tax imposed on tons. This doesn't really mean much because they can add slippage in pricing and anything to get revenue how they need to. Token utility. D2 are required to pay for subscriptions. Yeah, so they just, it's it's like the bare minimum token value model. They created ERC20. It has very little, it looks like, utility actually on chain. All they're going to do is use it for their business as a payment token for their services for their business. So, it's a laundromat. They have their own tokens. You use those tokens to use the machines in the laundromat. It's not incredibly sophisticated. They don't look like they've done any direct integrations with any on-chain marketplaces or dexes. And then they've got a bunch of subscription structures, and fine, that's okay. This is not a total scam token if they ship their product, right? Obviously. They've got they also are going to try and do this whole ICO thing. Okay, so it's this is an interesting project. We just gone through. We spent like a few minutes on it, and obviously it's not a complete uh, scam token, but we'll see if they can. We'll see if they can deliver. It's a good idea. And in the fallout of like trading platforms, you're gonna have to compete with Binance and things like this but FTX is gone, so that gives you a good opportunity to get into this place. It's good. It's gonna allow you to trade, and that might be good, and people might use it, but it's limited to the Ethereum white paper, it seems. So it's possible that they're only going to allow for, and if we look at their, I don't really want to look at their contract because they probably haven't published their code for it anyways, because they don't have a GitHub here. So they're building all their only public information is their token, and they're going to create software that you're going to pay for using their token. It's fine. It's a good minimum value proposition. It's minimal, but it's good. So at least it's not a complete rehypothecation pump and dump scam. So, there's interesting thing going on in the news. But let's get to like the more interesting thing, and that is, you know, this whole thing going on with Binance and FTX. And this is just whatever fragile white female shit saying about how crypto is scary. Um, and they did. He withheld information. I don't think this is really. O'Leary is not very well informed as to what's going on in the blockchain or crypto industry or exchanges or the technology. He did what a naive person from traditional finance would do is they looked at the pitch deck and they looked at the team and they looked at some of the charts and the data and they said that kind of makes sense as an investment, but he doesn't know how to look under the hood of the tech or the platform. So he is looking for a way to externalize cost and consequence of the failure of FTX in order way. They want to get more money out of Binance. So they're going to say that Binance took money out. They shouldn't have. They should give the money back. And then that's going to be a couple $1 billion in. And then they're going to try and get everything, all the assets in and then try to get everybody clawed back and get their money back. So he's trying to reach out and get money from Binance. This is, I don't see there's anything other than a big show going on here about crackdown on money law, according to would seek to bring crypto ecosystem with the existing ecosystem and blah blah blah. The legislation would direct financial crimes enforcement with treasurers to designate digital wallet providers, minor valid, and others money service businesses. Oh my God! You're gonna ask validators to do KYC? Well, nobody knows what they're doing. Uh, they are. This is come. This is a bunch of the news and the stories that are going on with the whole markets and brand drama is pretty some NFT stuff from more celebrities. Um, and generally is a bunch of industry FUD. If you look at all these headlines, it's industry FUD and it's a bunch of BS. So the thing that we should be looking for is, nothing on here. The sad thing is if you look at these news websites, it's just like, oh, they screwed up and crypto communities have money laundering, CTO onboarding, gaming, crypto, MoneyGram. Best crypto to buy today. This is a bunch of weird stuff, actually interesting. It might be interesting to go through this article and go through all of these ones that they're recommending and see what's going on with them. But if we look at the news, how is it too late to buy XRP? Yeah, of course. It's always it's always never a good idea to buy XRP. Um, this is FUD too. They handled all the withdrawals. Nothing broke. It wasn't a liquidity crunch. And they've got some assets. It is interesting. Study shows crypto holders are curious and optimistic on crypto markets despite bear, FTX and bear. Um, Only a 7% decline in future consideration. Pre-FTX posted crypto curious. What is this? It's found that despite the recent fall of crypto markets and FTX's high-profile bankruptcy, consumers remain optimistic and consider purchasing digital assets in the future. That's very telling. I mean, there have been a lot of also negative articles about sentiment related to FTX and the collapse. This is showing the net is very minimal, 7% less. The crypto curious actually went up. Crypto curious went up and crypto owners sentiment went down. This is what I was telling people when the FTX thing blew up and they thought it was all over and this is a tragedy and how we all need to, go home and go to sleep. Forget about this. But I knew for a fact, of course, this is attention. And in terms of publicity, there's no such thing as bad publicity. So they have very limited negative impact on the future. Majority of people would buy more. 90% of yep. Major response that crypto is becoming more popular. Look, 68% believe it's the next step in modern finance. So it's already 2/3. I mean, the initial crossing of the chasm has happened for mass adoption, and that probably already happened in 2021, somewhere between 2018 and 2021. So now you have too many people in the world who do too much about this and this opportunity that this whole C5 failure thing is just not going to kill it because there's more and more DeFi now. And the great news is that this is all going to create much more of a solid base for the markets uh, upon which to build. And a lot of people were talking about their predictions for bottoms of the market. And I think my perspective is a little bit different. We've got some down markets today, yada yada. Trying to put Ethereum below 1200, it's not going to work. And if we look at what's been going on, let's say Ethereum for the whole entire, year. I mean, we're getting at the end of the year here. It's going to be year-end review this Friday the 16th of December. Ethereum had a bad day, but let's check out 1 year. So let's look at the year. Right, we're starting at 4,000. That's a little bump off this secondary recovery. But here's when we start to see failures, right? This is when all the failures of Luna and then the capital, the Celsius and the Three Arrows capital stuff that happening after that. And then you have, BlockFi issues and everything. And then it comes down to here. Let's look at the price that I'm saying, the date of the bottom of the markets that I'm saying is June 21st. Let's say June 20th, 2022. And if we look at major assets, we can see they don't go below this June 22nd mark. So this is even here if we look at the collapse of FTX. We had, things blowing up and then we had things recovering. So here we have a market starting to recover out of that. We've got a correction in the beginning of another pull up and then some sideways action that leads into the collapse of FTX. And we go, from 16 all the way back down to like 1,000, 1,100. But you'll notice that the markets just will not go below this. 1,200 is just so impossible for these markets to go under because everybody knows Ethereum at 1,000 is too good of a deal. So that's what I have in terms of my perspective. I'm not drawing any fancy angles and Fibonacci head and shoulders patterns here to figure this out. I'm just thinking about the technology evolution, the impact of centralized failings, bringing the markets down here, and then the tech itself this is the fundamental value of the tech. Ethereum is $1,200, regardless of what is going on in the market in terms of centralized failures or innovation or anything. And we can even see here this was some anticipation up to the merge launch, which was maybe a little bit, it was a little bit anticlimactic because it didn't result in anything directly. So, there is very little, I think, potential for downside from here. If FTX is going to collapse and it's only, the market's going to drop, sure, another 40% back down, but it's not a capitulation or a collapse or there exists a fundamental level of support here amongst primarily existing holders. And that previous article kind of showed us. And if we look at something, and we can look at Binance, because Binance, their token here is different because they are a centralized exchange, but they have both a smart chain and a DEX chain that they use as an order book chain. I don't know what percentage of their orders go onto their decentralized exchange order book, but we can see Binance was at 300, so it's taken a major hit here over the last month, being up at 310. So this seems to be a ridiculous amount of FUD post FTX drama. And I think there's a major attack going on the exchange's credibility and their asset, etc. If what CZ has been saying is true, which I tend to agree, that he's smart enough to know that in crypto you need one-to-one backing of assets. If they have a fully secured order book or positions in their order book, if they're 100% one-to-one and not fractional in any way, there's no problem for them at all. It's also important to note that their Binance, their smart chain, is one of the most, if not the most used EVM chain. It's an Ethereum clone, and it works essentially identically, except for some of the consensus is different for the governance of the network. But this is something that's gotten absolutely crushed here. And it seems to be that this is not I mean, let's look at the Binance. Let's look at the bottom for this, right? So we look at the June 22nd bottom, the June 20th bottom, 196. So this it still hasn't even come back to that, and it was actually looking to run up here. So you know, they're talking about when is the bottom and when is the bottom, and I was saying the bottom was June 20th, 2022. I could be wrong, but I think that's a good way to look at it, because if we look at outside of technical trends, whatever the trend lines and the moving averages and the Bollinger Bands that you want to put on this, look at the major failings of centralized exchanges and look at the major, like what was happening. The Ethereum merge was happening in September. You also had launch of very important new technology in June, which is Thor chain, and also some good news for like osmosis and things like this. So in and amongst this summer here, you have DeFi coming, multi-chain DeFi coming together in the Cosmos and beyond ecosystem. So that's what's going on here. So my perspective is that when you have, so the major macro movements in the markets are generally more affected by failures of CeFi and then successes of blockchain tech. And so here we have another failure of CeFi, right? So this is the day FTX was going down, and look where Binance was headed. It was always 350. So Binance or FTX is this. This is like Thorchain and Rune and Ethereum merge. So you had like July, August, September was a really good run for some technology development and the critical information, the infrastructure, because Ethereum going to the merge and becoming compatible with IBC makes it compatible with the future Internet of Value. And now we have the FTX debacle, which is causing this fallout. So I would think, if we using the fundamental assumption that macro moves in the markets are failures of centralized systems and successes of decentralized systems, then if there's no further major failings of centralized systems, and we looked at that article where they said that firm stopped Mazars pauses all proof of work. It might have been because it was too positive. They might actually be trying to position themselves better in the industry, and they don't want to have a big green signal go out without themselves being properly positioned. Pull this back, release it in end of Q1, so that we can do more consolidation and acquisition in the markets during that period of time. Because the Crypto.com, KuCoin, Binance, this is basically the three biggest exchanges. And what they had nothing negative to say. They're just saying it's not an assurance or audit your opinion on subject matter. Limited findings based upon agreed at the subject matter and historical point in time. Right? So they're making mountains out of molehills in order to justify not continuing auditing. So I think that they don't like the fact that there's a lot of positivity for them, and they're going to try and find more and more negative stuff somehow. They're going to try and find bad things and create FUD because they're trying to demonize the whole entire space. Um, as long as they're solvent, it doesn't matter. And if they're smart, because they're making money either way, right? This is very interesting. So they're saying they do have reserves. 101%. Wow, 100% collateralized. Right. So they're saying he's a real like blockchainer. CZ is a real blockchainer. He actually likes the whole idea of it used to be every day back in the old days when nobody knew what the hell was going on with these exchanges. The online community would organize like a once a year withdraw test, and whatever percentage of the crypto community participated, they would all go to whatever exchange they had funds on, and they would withdraw everything. just to see if they could meet the demands. Um, yeah, so they had this is good because they're not using their BNB token to just reserve everything. Binance says they say 88 clean. That compares with 56. They have that's ridiculous. It means they have 90% of their reserves in this in nothing related to their own assets. 57 billion in reserves. Proof of reserves provides a real-time, transparent, non-manufactured data, which in the first time ever in the history of finance, the self data is self-audited through blockchain. So a former look at this. So Hal Schroeder, a former financial auditing standards board member and Rutgers University, told the Wall Street Journal that the audit Binance presented doesn't comment on the quality of Binance internal controls. They don't want to conclude that all systems are good. Whatever. They booked them at $83. Signs of the company founded during a bear. So this could be really good if you're trading. If you want to, sell the news by the rumor, then maybe you sold this, but now it may be after the downtrend. It's time to look at with this downward pressure doesn't seem justified. It seems mostly market sentiment that's being artificially created by some players in the traditional finance space that feel threatened by crypto. So that's kind of a basic go through of what's going on in the crypto space. It'd be really interesting and very fun to see what's going on with this. But at this point in time, I think the markets are the markets, and they've been bouncing around on the bottom for a while, dealing with all the CFI failure, and there's just been tremendous amounts of innovation being shipped on the tech side. Plus, it looks like, given the research we've seen being done so far on the remaining centralized exchanges, seems like at least the larger ones are smart enough. If they're smart enough to just have their user funds and be collateralized one to one, they should be able to handle anything. And that is tremendously reassuring to me, unless this is a bunch of misleading information. I tend to think that CZ from Binance understands the tech. He's coming from the tech side. He's coming from the DeFi side first, and he's trying to build a centralized exchange that works, and also transition it and use more and more blockchain technology to further de-risk the platform. So I think all in all, there's a tremendous amount of FUD going on for the industry because of the latest centralized exchange failure. And I don't see, if you look at the companies involved, it looks like they've all blown up. There was 6 or 7 kind of main entities involved, and it seems like they've all kind of gone into bankruptcy. And the exchanges that are running seem to have everything collateralized, so there won't be another run on any of the exchanges, which means, you know, all of the misallocated capital and over-leveraged positions have been worked out mostly. I'm sure there's some that people are keeping around to try and work their way out of, but there is no, I think, heavy anchor on anything that's going on in the industry. So that's good to know, and it's been a really incredible drama-filled week or 2 or 3. since the whole debacle began with centralized exchanges. And let's take a look at some of our picks, some of my own picks. Um, Binance and Ethereum are a couple of them. Also, Atom. Atom is the access token for the Cosmos Hub, developed by the Cosmos Project, one of the most important projects in this space, and this is under uh, heavy pressure too. It seems maybe some people taking some positional returns or something. But as you can see, if we go back to our June 20th here, we can see it's down to $6. So it is even not even, it's off the bottom as well. And there's a couple of other ones that are doing quite a lot better. If we look at, as I said, one of the most important technical innovations happening in the space is ThorChain and their interchain DEX, interchain self-sovereign, application-specific standalone blockchain built using the Cosmos SDK, creating hubs for swaps across blockchain ecosystems. Yeah, everything's had a sell-off today. Let's look at 1 year here. This has been a little bit tougher. They're smaller projects, so lowest prices were kind of taken out here in the latest after FTX scenario. But we've got, except for the FTX thing, we've got really good trends in the markets outside of that. Plus, the technology development is going really incredible because they've just been integrated by Trust Wallet. Now, Trust Wallet has 10 million installs. It's the official, or I guess, yeah, official non-custodial wallet of Binance. And they promote this as an alternative to using centralized exchanges, which is good. And if we look at this action here, we can see there's been a bunch of action. And so between the 10 million users of Trust Wallet, the kind of growth of its activity, plus the integration of ThorChain just 20 or 36 hours ago, we should be seeing during this lull of the holiday season maybe minor effects of that, but we'll have to see what happens at the beginning of the new year for this. So those are some interesting projects going on. I think we're in a series, we're in a phase of FUD by mainstream media and by establishment that's threatened by this. But importantly, there was also some people in regulatory agencies and governments that were understanding the value proposition of decentralization. And as long as they understand that, as long as they understand the difference between the centralized closed box opaque system that FTX was using and the fully transparent decentralized networks that are actually securing the crypto assets themselves, I think you're going to see some smarter decisions and some cooler heads prevailing overall. All right. That's been a great time for everybody here. Enjoy the week ahead and the weekend especially. And we always need some kind of music here, so we can't leave that out. And we need the right way to end it off. We need to know what's going on here. I think we need to start thinking maybe this is the beginning of the next run. We shall see. We shall see if this is the beginning of the next run, because it still has to be put in place. What's going on with the whole trends that are going on here. So we'll see in the next few weeks, and we'll definitely tune back in here for an end of year review because this year was one of the years in the crypto space. Maybe it didn't even work.